Oh man, markets can't get a break at all. Not only did we just have one of the worst Aprils that we have had in quite a while because of the tariff news and trade wars in general, now, as of Friday, we got major breaking news with Moody's Analytics downgrading the US credit rating from AAA down to AA. This is absolutely catastrophic, and it's going to set up the markets to completely crash at open. And I really want to talk about this because we may just get another opportunity to buy stocks cheaper once again. So before we get started, guys, with this video, make sure to like, subscribe, comment. It really does help with the algorithm on YouTube as well as Rumble. Make sure to follow us on X at Fatal Investing. And of course, if you like, join us on Discord, which is the best place to catch the live streams, the shorts, and the videos. The link to that is in the description below. So with that said, let's get started with this video. Now, before we get started with Moody's downgrade, I do have to point out one specific thing, and that is that 24 hours before, Michael Burry, the man who has predicted 20 of the last 2 market sell-offs, dumped his entire stock market portfolio except for Estee Lauder? Wow, that is very, very weird. Don't know why he did that, but I don't think we have any reasoning as to why he did that. This man, he's smart, but my goodness, he just doesn't explain why he does things. So you guys can see right there, he basically sold off everything all except for Estee Lauder. So yeah, don't really know if that has anything to do with Moody's thing. However, it's kind of interesting to point out regardless. Now, what really is making headline news is Moody's downgrades US due to ever rising debt high interest payment ratio. This is huge, guys. We have known for years now that the United States debt has been a major problem. In fact, as of me recording this video, we are nearly reaching $37 trillion worth of debt. Now, we had a solution for this in the form of Doge, as you guys can see right there. However, people have been very antagonizing towards Doge because we can't cut spending in departments that are useless. USAID, I am looking at you. But regardless, this is still a major problem, and well, it's come down to now Moody's cutting our grade when it comes to this. We got Moody's rating has downgraded the US government's long-term issuer and senior unsecured ratings to a AA1 from AAA, the highest possible rating, due to a combination of skyrocketing debt and high interest payment ratios. In fact, if we actually go back to the debt clock one more time, take a look at this, guys. Largest budget items. You can see here that interest on debt exceeds that of defense and war. That is a very big problem. Now, granted, obviously, I'm not a fan of war, but it's still something that the government should spend money on, right? Defense and war. However, interest payments on debt has been nothing, has already surpassed defense and war. And by the looks of it, we are just a few $100 billion away from surpassing Social Security and even that surpassing of Medicare and Medicaid, which is a major problem, guys. So this is not surprising that this has occurred. Quote, this 1-notch downgrade on our 21-notch rating scale reflects the increase over more than a decade in government debt and interest payments ratios to levels are significantly higher than similarly rated sovereigns, Moody's noted. The 10-year treasury jumped 3 basis points on the wake of the news to 4.48%. And something else that occurred this week was that Trump's tax bill fails in House panel as GOP splits on costs. This actually, at first, I was a little bit hesitant and kind of mad about that the Republicans didn't pass it. However, they actually did split on the fact that there was just still too much spending and not enough cuts to spending, which is in direct correlation as to why Moody's cut their ratings towards the United States. So I'm actually fairly happy that this did occur at the very end, because yes, you do got to have a lot less spending if you also want to cut taxes for everybody, which the bill did push for. Which, if we actually take a look at the 3 biggest credit rating agencies, S&P 500, Moody's, and Fitch, we can actually see what each of their ratings currently is for each individual country. And if we actually take a look at the USA, we can see that S&P has it at AA+, Moody's has it downgraded by capital A and then 2 lowercase a's, which is just one downgrade from triple A. and we got Fitch, which has it at AA+. Now, this is interesting because this current downgrade that Moody's just gave the United States is actually not the first time it's happened in the past 5 years. It actually happened in 2023 because Fitch downgrades US credit rating. And this is from, guys, the New York Times, archived, of course. And this happened on August 1st of 2023. The long-term credit rating of the United States was downgraded on Tuesday by Fitch ratings agencies, which said the nation's high-growing debt, interesting, burden and pension from brinkmanship over America's authority to borrow money has eroded confidence in its fiscal management. Fitch lowered the U.S. long-term ratings to AA+ from its top mark of AAA. The downgrade, the second in America's history, and now it's technically the third, came 2 months after the United States narrowly avoided defaulting on its debt. Wow, guys, absolutely wow. So this is actually fairly interesting because if we take a look at the S&P 500 in that time frame of August 1st, 2023, we could actually see that the overall S&P 500 as of August 4th, 2023 to, let's say, at around the end of October, this fell 8.05%. From August 4th, 2023 to October 27th, 2023. So that was an 8% drop in the S&P 500. Now, will things occur the same way that we just saw, 2 years ago with Fitch, with now Moody's? I don't necessarily know. However, if we assume that we see another 8% drop in the next, 2 to 3 months, we could basically guess that that would be about 476 points on the S&P 500, which would land the S&P 500 at 5,481 points by the end of July or something like that, maybe even August. So that's something to note right there because it actually may present itself as another great buying opportunity. Right now, everybody's bracing for today, when you guys are seeing this, today, 6 p.m. when futures open. And if things continue to sell off into Monday's market open at 9:30, it would just present itself as a great buying opportunity, which is something that I will always say. So here's hoping that this really does happen because it just means we have another great opportunity to buy some more great stocks. Now, obviously, how much each individual stock will fall by, that is up in the air, obviously, but it does seem like it should present itself as another great buying opportunity, which we all saw what happened in April, and now it's recovered. So if things continue to fall, do not panic. I'm not going to panic. In fact, I will be one of the few content creators here on the platform that will actually tell you guys, hey, great time to buy. Not telling you guys what to buy, but it's a great time to buy, right? So anyways, that pretty much does it, guys, for this video. Make sure to like, subscribe, comment. Really does help with the algorithm on YouTube as well as Rumble. Make sure to follow us on X at Fiddle Investing. And of course, if you'd like to join us on Discord, which is the best place to catch the live streams, the shorts, and the videos, as well as the calculator I use every single time I do a discounted free cash flow. The link to that is in the description below. And also the link to a video that links to the calculator, it's also in the description below. So guys, with that said, peace out. Have a blessed day. And with that said, I will see you all next time.